Welcome back to another video, guys. Today we're going over market structure part 2. I'm sure lots of you guys have heard the trend is your friend, and although you might think that being an ICT trader means you don't need to utilize that because you trade with liquidity, you are absolutely incorrect. And I'm going to show you how to identify trends using market structure and price action so you can start using liquidity to the correct advantage, which is to follow the trend. Don't try and fade every move. Try and use the trend to your advantage and use liquidity on the opposing side to induce the move higher in the direction of the trend. Especially when it comes to market structure, it's definitely not a good idea to be fading market structure. So let's get right into it. We're going to identify how market structure works, how premium and discount works, a little bit into premium and discount, and ultimately just how you can start to utilize this to your advantage so you're not caught shorting every little liquidity sweep and getting stopped out time and time again, and you can start to make sure that you are in line with the trend to increase your win rate and have higher probability chance of winning those trades. Okay, so the first thing that you have to understand is market structure, what the definition of a swing high and a swing low are. So if you don't quite understand those things, make sure you check out my other video. I know the audio wasn't as good. The quality might not have been as good, I hope at least, because this one is no longer my first video. That last one was though, so bear with me as these will get better as time goes on. First thing here you guys have to understand then is this is a swing, okay? And this is a bullish swing here. And this is not super important right now, but you do have the swing low here and a swing high here that broke market structure to the upside. Therefore, this is your range bullishly. And essentially what that means is you're going to expand this range over, and you're going to look for this to be disrespected on one of these two sides. This side would be a break of structure to the upside, and this would be a break in structure to the downside, or in this case, a breakdown here means we're actually shifting market structure, because we are bullish and now we would be shifting bearish. So we're looking in this range here because this is our swing range. And what happens here, we break market structure to the downside and we create this new swing low here, which means that this is our new range. Okay? Now, what is your swing high in this range and your swing low? Well, this is no longer your swing low, this is your swing low, but this is still your swing high. What happens in this range? Well, we start to break down here actually. So we make this here in this range of this high to this low, and we make a new low here. Now it's not actually a clean break, right? You don't see a closure, and that is important to me, but it's not always the case, because if you see displacement, sometimes that's enough. But this is potentially a liquidity sweep here, okay? And you wouldn't know that in time, but you would be able to tell that there is a push starting to occur here, so potentially you're looking for reasons to target these higher prices. What is important to know is this is your new range, okay? Swing high to swing low, and you're still bearish because you broke structure to the downside. Technically you're still looking bearish here. You made a new swing low, so it's not a break in structure in terms of a closure, but you did break these lows and you did make a swing low. A low and a low with a low in between is a swing low. And this is your swing high that led to the swing low. Not this one, guys. You can't have a swing high and then a swing high with no swing low in between. It just doesn't make sense. Anyways, this is your range here. And then what happens here? You break to the upside. Okay, so you broke the bullish side, so this actually becomes a market structure shift. Right, this is when you're shifting market structure to the upside now. So now it's no longer if you were bearish because of price action and trend, it's time for you to start shifting your mindset because price action is telling you we are bullish. And so we did break market structure to the upside here, and so what that means is this is the low that led to the break in structure. And when do we get a swing high? Right here. After this candle closes, this becomes our swing high. So now inside of this range, right, we did get that break above. We now get a new swing high right here. And this is your new bullish range. Okay? Right there. At which point, what happens? You break up again. Okay? And this is micro ranges. This is not a big expansionary move, but it does come. This is your indication. And you do get a little bounce off of this fair value gap in here. Okay, boom, we start to break structure to the upside again. So we break that structure, and we form this low here. Or sorry, let me do this. So now, in this range, this was your low, but then you broke structure on this candle here. This candle broke this high, which means that this is now your low. Okay, so this becomes your low, and this becomes your swing high. After this candle, this green candle right here closes, this becomes your swing high. And this becomes your swing low, and this is your new range. So, with that being said, what gets broken? Your high or your low? Well, your high gets broken, which confirms that this is your low. And if this is a little bit confusing to you right now, make sure you check out that other video because it does go over this exact stuff where kind of, not necessarily, I don't use the terms confirming low, but it is market structure. And you can't tell that this is your low until you've broken this high, because maybe you make another low here and you don't break this low. Maybe you do break this low. And then this definitely wasn't your low. But once you break the highs, this becomes your low. Anyways, if that's confusing, make sure you check out the previous video to this one. It's the only other video on my channel as this is being made. Depending on when you're watching this, there may be more. And so now this becomes, getting back into it guys, this becomes your new swing high, right? And where's your swing low on that range? Right here. Swing low, swing high. And what happens in this range here? What happens in this range? Oh, we break to the upside here. And I would actually move this up here after we got this wick. And I would use that as potentially a liquidity sweep. So I'd be thinking, oh, well, maybe we're going to go lower. We'll see. This is not convincing to me yet. But then we start. So what happens here? We don't break here. We get another liquidity sweep potentially right here. And this price action sucked here, guys. This is not good price action. This was very unpleasant and not high probable trading conditions here. But it is what it is, because the charts did tell us what was happening here. We just needed to dissect it a little bit. And as you can see here, this high does get broken right here, okay? And even if you wanted to say, well, what about this one? I think that's right. There is this one here. Liquidity sweep, liquidity sweep, liquidity sweep, break. Okay? That's your break right there. Market structure is still bullish. You don't have bearish market structure here, guys. Okay? But look, you had this break of structure right here to the downside, right? Some of you might be thinking that. You did. But what's the overarching range? What's the bigger market structure here, guys? This is the low you need to break. Not this low. This is a break in structure. This is your first indication that you might be going lower, but this is market structure. Okay? This low is your market structure. So although you're breaking structure to the downside, this is your change in character. This is your market structure shift level here. This is your early indication that you might be going lower, but it is not a confirmation. Okay? Anyways, getting back into that, guys, we do break this. So what happens when you break that high? Well, you're looking at the new range. Where's your swing low? It's actually this candle right here, okay? And inside of this range here, because you broke it, where's your swing low? Right here. Where's your swing high? Right here, after this candle closes. This candle closes, this is your swing high. Right? So this moves up here, and this moves down here. And now, this is an interesting case here because you also have a swing low here for the next range because we broke this and this is your swing low. Okay, so on this candle here where we broke over, you have this new swing. This is all one swing, guys. Yes, you had this liquidity sweep here on this level. What's different than over here? Well, nothing. If you wanted to use that, that's totally fine too. But what happened? The same thing. We broke structure to the upside. Okay? This is not a swing high. This is a swing high when this candle closes. A high with lower highs on either side is your swing high. Okay, so now you're working with this range here. What happens in this range from this green line to this red line? Well, you get this little peak above, which doesn't do much. Okay, maybe you move this up. That's totally fine. This is your range. You make this low. Is this low confirmed yet? No. Is it confirmed now as this candle closes? It is. Okay, this is now your swing low because you broke structure to the upside here, guys. This candle here broke structure to the upside, and now you're looking for your swing high. Boom, there's your swing high. Okay, on this candle close here, this becomes your swing high. This is your range for the next leg of movement. So this comes up here, and this comes up here as well. Okay, hopefully this is starting to make a little bit of sense, guys, and this will get a little bit more advanced as we continue this video. So if this is super easy, I apologize, but it is necessary to understand. Now, what happens in this range from this red line to this green line? You get this break in structure here. Where's your swing low? Right here. This is your swing low. We came down into this range, made a swing low right here, and then made a swing high here after this candle closed. This is also a swing high, yes, but this is the swing high, okay? Because it was the high that led to the low. You can't have a high and a high. There needs to be a low in between, just like back here, guys. You can't have a high and a high. There needs to be a low in between. Okay? So this is your swing high. And this is your swing low. What happens in this range here, guys? From this green line now, because we've made a new range, to this red line. Well, we didn't actually break down, did we? No, we held this low. We still have bullish structure. And how do you know that this is the low? Because this candle broke structure. So once we break structure here on this candle, we know that this now becomes the low. Okay, so this now moves here. And this, we're searching for the new high. When does the new swing high form? Right here, as this candle right here, it closes. So now you've got your swing high, and this is your new range that you're dealing with. And this brings us to today. Okay? This is your range. It's a big range, guys. This swing low to this swing high. And until we break this swing low, market structure is still bullish. Market structure is still bullish as long as this low stays intact. Do we have relative equal lows down here? Yes. Could we sweep those and continue bullish? Yes. Could we draw towards those? Absolutely. That's why it's on my chart. But we do not fade the trend unless we have indications that the trend is failing. First indication is liquidity sweeps. Have those occurred? Yes. They really have on the top, but, and you can't see that on this chart, but they have, especially on ES. And this is NQ on the daily time frame. I don't know if I mentioned that, but this is how you can determine daily bias and weekly expansions, guys. You just have to analyze some market structure here, and then you bring in PD arrays like these things here, and we'll get into that, but it won't be super advanced. So this is your high, and this is your low. We are currently inside this range. If we break this, we have a shift in market structure to the downside, and then we start printing these red boxes like we saw here. Okay? But right now, we are bullish. We are bullish. That's what market structure is telling us. Okay? Like your macroeconomic opinions are one thing, but you have to be able to read the chart and understand when you're incorrect. Otherwise, you end up shorting here, and you end up shorting here, and you end up shorting here, and you end up shorting here. When you are incorrect, you have to recognize you're incorrect and start to play the way that the chart is telling you. And the chart currently is telling us that we're bullish. Do I think that's going to continue forever? Absolutely not. This is a long little bull run here we've had. But it doesn't mean we can't make one more sweep higher. And until we start to break structure to the downside, there's no indication for us to really be over aggressive in long-term shorting. Intraday shorting, absolutely. I like to intraday short all the time, fade the little moves. That's one thing. But long term, these are your high probability trades. There's a reason why these green candles are bigger than the black candles. It's because the trend is bullish, guys. Like this, there's these, look in here, big black candles, not a lot of big green candles. Big green candles, also big black candles, but we didn't actually continue bearish. So that's why we're seeing these big green candles. This is an early indication to me. And you start to see big green candles here, break market structure, and then all these little black candles. This is your biggest black candle that you see pretty much the whole time. Maybe this one's bigger, but this one is bigger than that. This one is bigger. This one is bigger. This one is bigger. And as you can see, guys, these green candles are just bigger in general. You're seeing more green candles and you're seeing bigger green candles. It's a bull. This is a bull run. The algo is pushing buyers. It's pushing buy orders, I should say, into the market here. And that's what's causing us to go higher. Yes, this is of interest to me up here where we have this rejection block. This is a daily rejection block where we stopped after ES swept its highs. NQ stopped at the rejection block and stopped at the weekly consequent encroachment premium wick, creating an SMT divergence here. That's pretty interesting to me. But I'm not going to get too much into that. If you know, you know. But that's a lesson for another day. Now let's get into premium and discount. When the algorithm is printing higher prices, when we are in a buy model and market structure is bullish, price tends to do stuff like this. Okay, this is obvious buy model, bullish market structure, but it tends to go from premium to discount, okay? Price does that. It likes to come into discount. Discount means below 50%. Premium means above 50%. A rule that I have is I don't buy in premium and I don't sell or short in discount. And vice versa for shorting, okay? Price tends to do stuff like this, where it comes into a discount. And like this can be here, guys. I'm not talking about support turn resistance. You know, this just happened to be where I placed this. It could be like this. Doesn't really matter. Price tends to come into a discount when going long and come into a premium, like in this case here, for short opportunities. And those are your better opportunities, is to long in discount and short in premium. That's one of my rules when I take trades. You don't need to implement them. Obviously, it's up to you, but I suggest you at least try looking for them. And to keep this video kind of quick, or it's probably not quick, but not super long, let's just get into this real quick here, and I will show you what I mean. So, we have this market structure shift here, right? Swing high or swing low down here to the swing high up here. I'm just going to drag it out in time so you can see it a little bit better. We do not get into a discount. So maybe you don't take this long opportunity. You do, however, tap into this fair value gap. Interesting, before pushing up. As well as this little breaker block here. Weird. What about this? What about this range from this low to this high? Right here, this high, let's maybe zoom in a little bit here. This high here to this low here, this is your range, and we tap into a discount before pushing up. What does it tap into? Well, maybe it taps into like an order block here. Maybe it's random. Who knows? What I do know is price comes down here into discount before pushing up. What about the next range? Boom. High to low, or low to high, sorry, in this case here. Right, this was your range. This is your range for the next set, but as of this price action here, the chop that happened, this is your range. And what does price do? Well, you had to be incredibly patient, but price kind of came up, messed around a little bit in here, internal bearish structure, shifted internal structure, and then continued higher. What did it do? It came below the 50% mark, which means it entered a discount in bullish conditions. this is a potential buy, especially when you have a fair value gap. Okay, that looks like a pretty good buy opportunity there, doesn't it? Interesting. Let's move on to the next example. Oh, I kind of messed this up here, guys, sorry. This should be here. This was your range, but this is your range for this one. Doesn't really make a difference in this example, but this is your low to your swing high here. Price does not come down into a discount for this range here. It does, however, tap into this fair value gap, and that's one thing. But moving on to the next one here, you might have missed this trade. This trade didn't come down into a discount. Maybe you don't take that trade. And you miss some, but you're less likely to lose if you implement a premium and discount rule into your trading. So from this low to this high here, what happens? Price does tag into discount here and then push up. What about the next one? Okay, from low to high right here, guys. Okay, what does price do? It taps into a discount, into this fair value gap, pushes up pretty aggressively and pretty fast. Okay, what about the next range? Low to high, out in time, it doesn't come into a discount, does tap into this fair value gap before pushing up. Okay, what about the range that we are in right now? From this low here, oh, I messed up again, guys. I'm sorry. This is, how did I mess that up? This is supposed to go here, like this. Okay, low to high, and then you broke this here to the upside, right? This candle here broke up. Maybe I explained it right, I just didn't mark it out right. But then this becomes your next move. Okay, it should be like this. Boom, this is your swing. The range was the correct range for what we're in right now. I just missed this part here because I was moving a little bit too quick. But regardless, the process still stands from this low to this high here. Yeah, we go into a discount. And do we go into a deep, deep discount? Absolutely, but we don't break structure. We don't shift market structure. Okay, so this is still bullish. And as you can see, that's what we saw here. Now you take this low to this high, and this is the range that we're currently in. And what did price do? Came into a discount, into this daily fair value gap again, and is now pushing up higher. This is also a weekly fair value gap, which is why it looks a little bit different than the other ones that I drew. I just drew it like this so I could differentiate them. We came into a discount, and now we're pushing up higher. And we did get rejected, like I said. But the important thing here is that market structure is still bullish. Okay, guys? I know there's kind of, this might be super basic for some of you, and some of you, this might be incredibly confusing. So if it is confusing, watch my previous video on market structure to get the definitions of swing highs and swing lows, market structure shifts, and things of that nature. But this is an intro to premium and discount while looking at market structure and why you shouldn't be fading the trend. Don't fade the trend, guys. You can take, if you would have taken this here and said, oh, look at these equal highs, for example. This is liquidity here. I want to be able to short off this liquidity. Well, you got smoked, okay? Yes, liquidity is important, but you have to understand what's going on in the market as well and use other indications besides just equal highs and equal lows. That's why the 2022 model in ICT's mentorship isn't just short off liquidity. It's liquidity, break of structure or market structure shift, and then fair value gap with displacement. Because those things combined together make a high probability model, not one of them alone. Anyways, this is also liquidity sweep, okay? Here we go, guys, right here. Look, you can see, boom. This was your liquidity sweep following the trend. Right? Like you built up this liquidity right here, right? Liquidity, 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 built it up, and then we pushed down into this fair value gap below the liquidity. Boom, into there, pushed up, all the way up, okay? This is how you want to use liquidity with the trend. This is using internal liquidity to continue the trend, and this would have given you a great entry for a long-term position or a swing trade. But it also just tells you that this is where price wanted to go. And after we swept that liquidity, came into the discount and entered that fair value gap, we started to leave this incredibly ugly consolidationary phase that we were in. And then we started to break structure to the upside, make more fair value gaps, bounce off those fair value gaps. You know the story. Price bounces off these things and continues up higher because we know market structure. Like I said, guys, I know this might be a lot to unpack for some newer people. I hope I did an okay job explaining this. As always, if you got any questions, make sure to let me know in the comment section down below, and I will do my absolute best to answer those for you. And until next time.